Let's get more on the markets, in particular energy, from Bill Harris, President and Portfolio Manager at Avenue Investment Management. Bill, thanks very much indeed for joining us. Feels like we haven't talked to you for ages. What is your take on the oil market right now? There's a lot of pessimism that supply is going to exceed demand over the next year.
Right. So I'll just hang on that one word, pessimism. So when we're looking around in the market right now, and where can we find things that are still interesting or where you have value? And the extraordinary thing is just how much everything is run. And so taking one part of the market, literally standing back and saying, okay, where is there pessimism? Where might there be some opportunities? And that's where we come up with energy. And so now going into the story, I think about this time last year, you also would have been able to frame it, saying sort of there's an oversupplied market, and there's a trade is slowing down, and then OPEC actually puts in more energy into the market. So there's all sorts of reasons why the oil price is where it is. Now, as time goes by, you start tightening it up, and there is an argument that once we get into 2026, you're going to actually get a tight oil market now that we've had sort of 2-3 years of oversupply. So with that in mind, go in, can we find anything that we like? And then also, interestingly, when we look at the stocks, so the oil price looks like it's doing nothing. Canadian dollar oil price, it's better because with the currency, it's sort of flat around $85 Canadian. And the stocks are actually moving. This is what's interesting. They had a big low in the summer, and they've actually had a rally depending on what you're looking at. There's also consolidation, sort of get the interest going. This is the Cenovus and the MEG deal that's in the market right now. Mm-hmm. And so we actually think it's hard to find anything that's interesting, but this is where we'd want to go and sharpen our pencil.
Isn't it interesting? Maybe we could put up a 5-year chart for XEG, which, as you know, is an ETF that tracks energy producers, and that has been doing just fine. So it suggests that investors are happy right now with the cash flow that's coming from giant Canadian oil producers.
And they're just really inexpensive, or they started. I mean, there's bit more fair price right now, but in the summer where they extraordinarily, beaten up sector. So if I just talk about our names, we still have a core positions. It's the big ones, Canadian Natural Resources, and we have Tourmaline more on the natural gas side, and Canadian Natural Resources on the oil and the oil sands side. But they really are very well-run, profitable businesses. And again, there's a shot that the global oil market gets tight next year. And then this other, it's the technology answer. That technology, you need data centers for technology, you need power to power the technology. And then we get to the gas market, and there's just not enough gas in the system. So there's all these numbers being thrown around of how much more incremental gas we need. So you might, again, way too much gas in the system right now, but you could actually get that tightening up next year.
Yeah, but I mean, the gas market, it feels like it's been swamped for so long. Maybe we could put up a 1 or 5-year chart for U.S. natural gas. And as you know, Alberta this year, we briefly saw the old price going into negative territory for a while. Yes.
So if we're looking, again, I come back to the point, if we're looking around the stock market, looking for deals, there's not a whole lot out there. I just want to pick, because I know our time will go by fast. The only other part, when we go to look in the U.S., there's consumer industrial names that have really come off. But other than that, there's not a whole lot of value in the market. But saying, okay, here's natural gas. There is a story how natural gas could tighten up, but you'd actually have to buy the stocks now.
When I go to Prince Edward County, I like to go into a place called the County Farm Centre because they have great outdoor clothes. They have stuff for raising chickens. I'm not in that market right now. They have frozen food, which in bulk, I like that. You like the look of a company called Tractor Supply Company, and they are a retail farm store chain south of the border. Tell us what the attraction is there.
So again, this is a great example, a consumer company. The stock has come off. You could make an argument right now that we're actually in a consumer recession in the U.S., depending on what I think that might be there's error in that chart.
Something wrong with that chart. Sorry. Yeah, carry on. Okay.
But this is a really consistently profitable business that just incrementally grows. It's one of these ones that buys back its stock like crazy, and it's just a compounding machine. But it's right now it's a little out of focus. Also, really think about it. Mostly what Tractor Supply does, it's kind of a home goods retailer I talked about, but a big chunk of it is actually pet supplies. Very, very consistent business, slightly out of favor. And so this is the type of thing, you want to buy them when, when everybody's looking somewhere else. And this one is a bit weaker. This is why we'd sort of highlight that. It's something we own in our portfolio that we think is trading at a very good level.
Right. So TSCO, my chart is showing that it's up 83% price-wise in the past year. So sorry about the chart there, but it's an interesting name, Tractor Supply. Then you have another name, which is in gas stations and convenience stores, Murphy USA.
So yeah, just coming on the show to sort of talk about what the things we think are interesting. And again, this consumer recession we're having in the U.S. If you have Couche-Tard's, Circle K, we have that exposure to that stock. It's been weak as well, but this is something similar to that. It is a convenience store tacked on the side of Walmart's, selling energy drinks and that kind of thing through the U.S. But again, it's a really profitable, consistent business. We really like it. We've done really well with it, but it's just showing that it's weaker given the context of the market's looking at financials and it's looking at artificial intelligence, and these sort of businesses are being ignored at the moment. And so that's fine. We've done well on those type of companies, but if we're going to with fresh investments, where do we want to look? And we want to look where the market is slightly weaker.
So Murphy USA. Now, I'm not sure if we have that stock. I am showing it down 23% in the past year. There we go. Why have investors been disenchanted with it lately?
Oh, I can't emphasize this enough. There is a recession going on in the U.S. Let's just put it as straightforward as you can. But where is the recession? It is not in technology investing and capital spending. There is no recession going on there. There is no recession going on in government. They're having a massive, almost $2 trillion budget deficit. But the consumer, the everyday American, where there's the prices have gone up everywhere and the budgets are tighter. There's 100% a consumer recession that's going on. And so, but then that opens up the opportunity to go in and look at a company like this, which has a great long-term track record, a great franchise, but it's currently out of favor because of the, that macro call in the U.S.
Bill, thank you very much indeed. Bill Harris.
Great for having me on. Thank you.
Bill Harris, President and Portfolio Manager at Avenue Investment Management.